Hello moneymakers, welcome to today's top 5 market updates. We start today in the USA, where payrolls processor ADP will release its monthly report on hiring in the US economy at 8:15 a.m. Eastern Standard Time. Analysts expect the economy to have created 3 million jobs, after April and May numbers showed that more than 21 million jobs were lost. The ADP National Employment Report measures levels of non-farm private employment. The report is based on the actual payroll data from about 24 million employees processed by the Automatic Data Processing, Inc. Next up, the USA will release its June ISM Manufacturing PMI at 10 a.m. Eastern Standard Time. The Purchasing Managers Index from the Institute for Supply Management (ISM) is expected to rise to 49.5 in June from 43.1 in May and 41.5 in April. But even if it rises back to the 50 level that separates growth from contraction, the level of activity will still be down sharply from where it was at the start of the year. The employment index is expected to climb to 43.0 from 32.1 in May and 27.5 in April, which was the second lowest reading in the 72 years of the survey. Our next update is from the commodities sector. Government data on crude oil inventories is due out at 10:30 a.m. Eastern Standard Time. Data released by the American Petroleum Institute late on Tuesday showed that the U.S. crude and gasoline stocks declined more than expected last week, while distillate inventories rose. Oil prices rose more than 1% on Wednesday in Asia after data showed crude inventories in the United States fell much more than expected, suggesting demand is improving even as the coronavirus outbreak spreads around the world. Brent crude rose 48 cents, or 1.2%, to $41.75 a barrel. U.S. crude was up 54 cents, or 1.4%, at $39.81 a barrel. Next up, Germany's manufacturing sector contracted at a slower pace in June. IHS Markit's final Purchasing Managers Index (PMI) for manufacturing, which accounts for about a fifth of the German economy, rose to a 3-month high of 45.2 from 36.6 in May. That was still below the 50 mark that separates growth from contraction, but above a flash reading of 44.6. Phil Smith, principal economist at IHS Markit, linked the rise to a pickup in production activity and a more positive outlook as manufacturers hoped that the lifting of restrictions would spur demand. Our final update is, the UK released its June's Manufacturing Purchasing Managers Index. The IHS Markit CIPS UK Manufacturing Purchasing Managers Index (PMI) rose to 50.1 from 40.7 in May, creeping back above the 50 line that signifies growth for the first time since February. Rob Dobson, director at IHS Markit, said, "Output edged higher and domestic demand firmed as lockdown restrictions loosened, factories restarted and staff returned to work. Manufacturers are nevertheless looking forward to better days." Thank you for watching. Subscribe for regular updates. Only on Capital Street FX.